Welcome to Crypto Nomad. Everyone thinks they understand MARA Holdings. They don't. They still see it as Marathon Digital, that Bitcoin mining company that rides the crypto waves up and down. Financial media calls it volatile. Analysts treat it like a leveraged Bitcoin play. Retail investors think it's just another mining stock. But here's what they're missing. While everyone was watching Bitcoin prices, Mara was building something completely different. They were constructing the infrastructure backbone for the next generation of computing. And in 2025, they just made a move that changes everything. So the real question isn't whether Bitcoin goes up or down next week, it's this. What happens when a misunderstood energy company starts buying AI infrastructure, partnering with tech giants and positioning itself at the center of the compute revolution? You get a business transformation that nobody saw coming. You get strategic acquisitions that unlock new revenue streams. You get a company that's about to punch the market in the face with numbers that don't fit the old playbook. Mara Holdings just did exactly that. So let's break down what they actually built. Not the headlines, not the hype. The real business, the partnerships, and why Wall Street is still using the wrong scorecard. Let me save you the confusion. If you're still analyzing Mara as a Bitcoin miner, you've completely missed the transformation. This isn't a mining company anymore. This is a digital energy infrastructure operator that happens to produce Bitcoin as efficiently as anyone on the planet. They don't just mine crypto. They control power generation, manage data centers, and now they're moving into artificial intelligence and high-performance computing. Think about what that actually means. Most Bitcoin miners rent space and buy electricity. Mara owns the land, controls the power, and builds the facilities. They've got over 1.1 gigawatts of energized capacity with expansion potential up to 1.7 gigawatts. That's not mining infrastructure, that's compute infrastructure. That's AI infrastructure. That's the foundation for whatever comes next in the digital economy. And here's the part that should make every investor pay attention. In August 2025, Mara completed a $168 million acquisition of a 64% stake in Exaion, EDF's high-performance computing and cloud infrastructure subsidiary. This isn't just another acquisition. This is Mara buying their way into the AI revolution with proven infrastructure and existing revenue streams. Exaion isn't some startup. Founded in 2020, Exaion operates data centers, including a facility in Sherbrooke, Canada, spanning 4,000 square feet with 780 kilowatts of capacity, housing quantum computing equipment. They've got 1,250 GPUs running AI workloads. They've got partnerships with major tech companies. They've got revenue today, not promises for tomorrow. Let's talk about Mara's balance sheet, because this is where most people get it wrong. They're sitting on over 34,000 Bitcoin worth billions of dollars. But here's what matters. They didn't buy that Bitcoin with borrowed money or financial engineering. They produced it. They mined it through operations that they control from power generation to final output. That's a completely different risk profile than companies that leverage up to buy Bitcoin. Mara's Bitcoin position is the result of profitable operations, not financial speculation. And unlike passive holders, they're actively managing that treasury to fund growth and generate additional returns. Their cost to produce Bitcoin is among the lowest in the industry because they control their own energy sources. That means every Bitcoin they mine has huge margins built in. And instead of just holding that Bitcoin, they're reinvesting the profits into infrastructure that opens up entirely new revenue streams. Their cost to produce Bitcoin is among the lowest in the industry because they control their own energy sources. That means every Bitcoin they mine has huge margins built in. And instead of just holding that Bitcoin, they're reinvesting the profits into infrastructure that opens up entirely new revenue streams. Here's where it gets interesting. While everyone was debating whether Bitcoin would hit new highs, Mara was quietly positioning itself for the AI boom. And the Exaion acquisition isn't just about adding capacity, it's about adding capabilities. Through the Exaion deal, Mara secured access to AI and high-performance computing infrastructure with an option to increase their ownership to 75% by 2027 for an additional $127 million. That's not just buying hardware, that's buying expertise, existing relationships, and proven revenue streams in one of the fastest-growing sectors in technology. But it gets better. Mara has announced partnerships with TAE Power Solutions, backed by Google, and Pado AI, backed by LG, to develop grid-responsive load balancing platforms that integrate Bitcoin mining with AI and high-performance computing workloads. These aren't just partnerships, these are strategic alliances with some of the biggest names in tech. Think about what happens when you combine MARA's energy infrastructure with AI computing demand. You get facilities that can dynamically shift between Bitcoin mining and AI workloads based on profitability and demand. When AI compute is in high demand, you pivot capacity there. When Bitcoin mining is more profitable, you shift back. That's not just diversification, that's optimization at a level that most infrastructure companies can't match. And the timing couldn't be better. AI infrastructure is constrained by power availability and data center capacity. Mara has both. They control the energy and they're building the compute infrastructure. That positions them perfectly for AI workload growth that's projected to explode over the next decade. Let's cut through the noise and look at what MARA is actually delivering. The company rebranded to Mara Holdings in August 2024, signaling their evolution beyond Bitcoin mining into broader digital infrastructure. Their revenue growth has been explosive. They've built one of the most efficient Bitcoin mining operations in the world while simultaneously expanding into high-performance computing. The $950 million in fresh capital from their July 2025 convertible note offering gives them the resources to accelerate both organic growth and strategic acquisitions. But here's what really matters. They're building recurring revenue streams that aren't dependent on Bitcoin prices. The AI infrastructure through Exaion generates revenue from computing services. The energy infrastructure can serve multiple applications. The Bitcoin mining provides cash flow and treasury growth. That's 3 different revenue drivers in one business. Most companies struggle to optimize one business line. Mara is building synergies between 3 different high-growth sectors: energy, crypto, and AI. The Exaion acquisition accelerates that vision by adding proven AI infrastructure and existing customer relationships. Instead of building AI capabilities from scratch, they bought a company that's already serving AI workloads and generating revenue. The deal was announced in June 2025 and is expected to reshape Mara's business model, transitioning it from primarily Bitcoin-focused to a diversified digital infrastructure operator. That transition is exactly what investors should be watching. Here's what every investor should understand about Mara Holdings. This is a case study in business model evolution. They started as a Bitcoin miner and evolved into something much more valuable, a vertically integrated digital infrastructure company. The key lessons are infrastructure control matters. Companies that own their power generation, land, and facilities have sustainable competitive advantages over those that rent or lease. Diversification through synergy works. Instead of choosing between Bitcoin, AI, or energy, Mara built systems that can serve all 3 markets efficiently. Strategic acquisitions can accelerate transformation. The Exaion deal didn't just add capacity, it added capabilities and existing revenue streams in a high-growth sector. Market misperception creates opportunity. When analysts use outdated frameworks to evaluate evolving businesses, mispricing often follows. The biggest mistake investors make with companies like Mara is using yesterday's metrics to evaluate tomorrow's business model. Bitcoin mining was the starting point, not the destination. Because the investors who figure this out first, before Wall Street catches up to the transformation, are the ones who typically benefit most when market perception finally aligns with business reality. That's not investment advice. That's investment education, and that education just might be the most valuable thing you can invest in. Thanks for watching Crypto Nomad. If this breakdown helped you understand what Mara is really building, please hit that subscribe button and let me know in the comments what company you'd like me to analyze next.